So there's this new draft bill making the rounds in the US Senate, and it could literally change the entire crypto market as we know it. In this explainer, we're going to dig into a pretty wild claim from our source material that the rules of the game have already been rewritten, and the winners? They've already been chosen.
All right, here's how we're going to break it all down. First, we'll look at this new crypto rulebook itself. Then, we'll get into the so-called Elite 8 that it supposedly carves out and protects. We'll see how this could finally end all the market uncertainty and wrap up with a smart money play that's allegedly going down right now behind the scenes. Let's just start with this bombshell of a quote. This is the core claim from our source. I mean, what a bold statement, right? It suggests that a massive, fundamental shift is happening as we speak, and that we're moving from an era of guesswork to one with a clear, legislative blueprint.
Okay, first up, the new crypto rulebook. According to our source, this incredibly powerful piece of legislation is being called the Clarity Act, and its goal, well, it's pretty simple: to end the regulatory confusion once and for all.
You know, for what feels like forever, the biggest fight in crypto has been this. Is an asset a security, which falls under the SEC, or is it a commodity, which belongs to the CFTC? This constant tug-of-war between agencies created this huge, frustrating gray area. The Clarity Act, as our source describes it, is all about drawing a permanent line in the sand.
And this quote, it just nails why that is so important. Think about it. A massive pension fund or a huge bank, they're not scrolling social media for investment advice. They need one thing above all else: legal certainty. By setting the rules in stone, the US government would essentially be sending up a giant flare, signaling to the world that it's finally safe for the really big money to come into the market.
Okay, but here's where the source makes its most explosive claim. The bill doesn't just lay out some general rules for everybody. No, it allegedly carves out a brand new, protected class for a very select group of assets.
And the key to this whole thing is this new legal term, non-ancillary asset. Now, I know, it sounds super jargony, but forget the complicated words for a second. In simple terms, getting this classification means an asset is treated just like a commodity. Think gold or oil. And that means it's permanently outside the SEC's reach. It is the ultimate regulatory green light.
So who gets this golden ticket? The source calls them the Elite 8, though it only names these 6 specifically. You've got your heavyweights, of course, like Bitcoin and Ethereum. Then there's XRP, coming off its big legal battle. You have some major infrastructure plays like Solana and HBAR, and then, interestingly, even Dogecoin makes the list, apparently because of its widespread use. The main takeaway here is that these would stop being just tokens and would become legally defined goods.
And get this, it's not just some random list they cooked up. The source claims the bill sets a very hard deadline. To qualify for this special protected status, an asset has to be the main component of a nationally listed ETF by January 1st, 2026. That puts a serious ticking clock on this whole race for institutional adoption.
So, when you put all these pieces together, the clear rules, this new asset class, that firm deadline, what do you get? Well, according to the source, you get the end of the chaotic, unpredictable Wild West era of crypto.
I mean, just look at the difference here. We're talking about moving from a world of constant legal battles and institutional hesitation to one where the rules are fixed, the path for products like ETFs is crystal clear, and the biggest financial players on the planet can finally get off the sidelines.
And look, the source claims this whole thing didn't just pop up overnight. It points to a law that supposedly already passed, which it calls the Genius Act. This law allegedly took stablecoins, moved them away from the SEC, and put them under banking rules. It was basically step one, creating the stable, regulated rails for big money, before even tackling the more volatile assets.
Okay, so the legal tracks are being laid. What comes next? Well, the train full of trillions of dollars from the world's financial giants, of course.
So how exactly does this open the floodgates? Well, for one, it turns filing for an ETF from this huge political battle into a simple, boring procedural step. More importantly, it eliminates what's called career risk. Imagine you're a fund manager at BlackRock. You're not going to risk your entire career on a whim from a regulator, right? This bill, according to the source, is the official permission slip they've all been waiting for.
All right, so this all sounds huge, which brings us to the elephant in the room, the big question that I am sure is on your mind. If all of this is really happening, why does the market seem so quiet? It's the logical question, isn't it? If the biggest news in crypto history is unfolding behind the scenes, shouldn't prices be going to the moon? Well, the source argues that institutional adoption isn't like a switch you just flip. It's a slow, deliberate process.
See, this is the key difference between how retail thinks and how institutions move. The source claims we are right here in Step 2. Step 1, the legislative blueprint, is already drafted. So now, in Step 2, the smart money is quietly getting into position while all the public debate happens. It's only after Step 3, when the law is actually signed, that Step 4 begins, that slow, methodical inflow of capital.
And this quote just captures that difference in perspective perfectly. It's so true. While most of the market is glued to the daily price charts, stressing about one-minute candles, the source claims the biggest players are basically watching the legislative calendar. They're not trading the noise, they're positioning for a massive, fundamental shift. So we'll end on this final, powerful thought posed by the source material. It argues that a blueprint for the next era of digital assets is being finalized, that the winners are being named, and that the institutional capital is just sitting on the sidelines, waiting for the final signature. The only question left is, where is our attention focused? On the daily noise or on the generational shift?